Welcome to The Deep Dive, your go-to source for extracting critical insights from earnings calls. Today, we're embarking on an in-depth exploration of ArcBest Corp's second quarter 2025 results, which dropped on July 30th. This quarter really presented a fascinating interplay of, well, strategic execution within ArcBest and the undeniable challenges of the broader market. And the immediate investor reactions certainly reflected that complexity.
Precisely, yeah. We observed some quite notable movements in the market following the earnings release, signaling a, let's say, cautious stance from investors. It's pretty clear they were carefully weighing the operational improvements ArcBest highlighted against, persistent macroeconomic pressures and a few specific financial figures that didn't quite meet expectations.
So let's get straight to the core numbers then, because that's always our starting point. ArcBest reported a GAAP earnings per share, or EPS, of $1.12. Now, for those maybe less familiar, GAAP stands for Generally Accepted Accounting Principles, the standard rules. However, their non-GAAP EPS, which often adjusts for one-time items, to give a clearer picture of the underlying business performance, came in at $1.36.
And that non-GAAP figure, crucially, fell short of the analyst consensus, which was $1.46. Revenue for the quarter was $1.022 billion, also missing the consensus target of approximately $1.04 billion. Representing a 5.2% decline compared to the same quarter last year.
Okay, and diving deeper into those segments.
Right, so the asset-based segment saw its operating ratio, or which is a key metric in logistics, essentially measuring operating expenses as a percentage of revenue. So lower is better. Well, it deteriorated. It went to 92.8% from 89.8% in the prior year.
Not great.
No, it signals some noticeable profitability challenges there in their core LTL, or less than truckload business. However, it wasn't all difficult news. The asset-light segment, focusing more on managed solutions and brokerage, posted a non-GAAP operating income of $1.1 million.
That's a switch.
It is, a notable turnaround from a loss of $0.6 million last year. And they also achieved an adjusted EBITDA of $2.5 million, indicating, well, a significant improvement in that part of the business.
That turnaround in asset-light is definitely a highlight then. And what about returning value to shareholders? Were they active there?
They were quite active, actually. They returned over $47 million to shareholders in just the first half of 2025. That was through a combination of share repurchases and dividends.
Okay. So that's a clear signal of commitment even with these market challenges. All right, with those initial figures laid out, let's truly unpack this call and dig into what the leadership emphasized. Judy McReynolds, the chairman and CEO, she really set the stage by acknowledging those persistent macroeconomic challenges affecting so many industries right now.
Yeah, she did. She specifically pointed to softness in manufacturing, a sluggish housing market, and the ongoing uncertainty around interest rates and tariffs. The usual suspects lately.
Right. But she also pivoted, didn't she, to highlight ArcBest's strategic strengths?
Exactly. She emphasized their deep-rooted customer-centric approach and a disciplined execution of their plans. It sounds like they're trying to play both offense and defense at the same time, really.
A classic balancing act.
It is. And what's fascinating here is how their asset-based segment demonstrated a clear volume versus yield trade-off. So, get this. Daily shipments increased by a solid 5.6% year over year, and tonnage per day was up 4.3%.
So they're moving more freight.
Definitely moving more freight. Yet, revenue per hundredweight, basically their pricing power declined by 3.1%. Management attributed this interesting dynamic to growth in easier-to-handle freight from core customers.
Okay. So lower revenue per pound, but maybe easier to process.
Precisely. Easier operationally, helps keep costs down a bit, but to combat that yield decline and shore up pricing, they secured deferred increases, averaging 4% in contract renewals. And, importantly, announced a 5.9% general rate increase, effective August 4th. That's a crucial move aimed at boosting pricing for the second half.
That 5.9% general rate increase, that sounds significant, especially in what you described as a soft freight market. I mean, how much pushback do you think they might face, and how quickly can that really help their pricing power? Seems like a bold move.
That's a perceptive question. Yeah. Look, general rate increases are standard in LTL, but their effectiveness in a soft market, well, it really depends. Depends on supply-demand balance, strength of customer relationships, the value ArcBest brings. Given their focus on this easier-to-handle freight from core customers, they probably have a stronger negotiating position with those established relationships.
Makes sense.
The intent is definitely to regain some lost yield. History suggests these increases typically start flowing through fairly quickly, but, the full impact. We'll see that unfold over Q3 and Q4.
It's a key lever they're pulling, for sure. And speaking of bright spots, that asset-light segment turnaround, its return to non-GAAP operating income was a real highlight. What drove that? Was it just cost-cutting?
It was definitely more strategic than just slashing costs. I mean, sure, they focused on reducing operating costs, but the improvement was driven by a strategic focus on improving margins overall. And alongside that, impressive double-digit growth in both shipments and revenue within their managed solutions business, that actually hit an all-time high.
Wow, an all-time high.
Yeah, so it suggests they're not just leaner, but also winning more high-value business in that segment. It's really a testament to their diversified service offerings paying off, even when the traditional LTL market is tougher.
Okay, so how are they driving these improvements? What's the mechanism? You mentioned strategy, but were there specifics on innovation or efficiency?
Oh, absolutely. Management detailed their innovation and efficiency strategy pretty extensively. It's quite tech-focused. They're leveraging AI and predictive analytics for real-time optimization. Think labor planning, delivery routing, dock operations in the asset-based business. They actually called it their most productive quarter since 2021 because of this.
That's a strong claim.
It is. And they're expanding their digital quote pool for dynamic space-based pricing processing over 200,000 quotes daily. Imagine the efficiency there.
200,000 a day. Wow.
Yeah. Plus, their city route optimization platform is in phase 2 in over half their service centers. Phase 3 is coming, introducing real-time pickup optimization using AI. And there's a new dock management system built on Vox technology that's vision and scanning being rolled out to enhance visibility, streamline workflows. All these efforts, plus compliance training, contributed to about $14 million in cost savings, they said.
That's an impressive list of tech initiatives. Beyond the $14 million cost savings, how are these really differentiating ArcBest from competitors? And where do you see the biggest long-term ROI? Are they actually ahead of the curve here?
That's where it gets truly interesting, right? Because these tech pushes aren't just about cutting costs. They're fundamental to securing a future competitive edge. Leveraging AI for optimization isn't just incremental improvement anymore. That most productive quarter since 2021 comment speaks volumes. The digital quoting, the route optimization with AI, the Vox system, it's all adding up. In my view, the long-term ROI isn't just efficiency. It's about superior customer service, more reliable deliveries. Ultimately, it's about gaining market share by offering a more consistent, predictable experience than maybe some competitors lagging in tech adoption.
That kind of foresight feels particularly important given another big announcement on the call, a leadership transition. Judy McReynolds retiring as CEO end of 2025. Seth Runser, the current president, stepping up Jan 1, 2026. But Ms. McReynolds stays as chairman of the board. What does her staying on as chair signal? Continuity, mentorship, phased handover.
Well, it's likely a combination of all those things, yeah.
Yeah.
Having Judy McReynolds, a real seasoned veteran, remain as chairman signals a strong commitment to continuity and stability, especially now, right? During macroeconomic uncertainty and all this tech investment, it gives Seth Runser the benefit of her experience, her strategic oversight, ensures a smooth handover, avoids an abrupt change. This kind of phased approach often reassures investors and employees that the core vision is intact, even as new leadership takes the day-to-day helm.
And they shuffled the board a bit too.
They did. Welcome Tom Ulrich brings over 35 years of industry experience. Steve Spinner is set to retire from the board in October, so further shaping that governance structure.
Okay. And looking ahead, what about forward guidance? What did they tell us to expect?
For guidance, management expects about 70 basis points of sequential OR improvement in asset-based into Q3. A basis point is 0.01%, so 0.7%. So this is consistent with historical seasonal patterns, so a usual uplift.
Right.
For asset light, they anticipate non-GAAP operating income to range from break even to maybe $1 million in profit for Q3. So continuing that positive trend.
Okay.
In an early read on July, asset-based daily shipments were up 2% year over year, but revenue per day was still down 1% year over year. So volume's holding, but pricing's still a challenge there.
So if we pull all this together, this mixed bag of results, strategic moves, what does it mean for investors? Feels like a clear divergence between management's tone and the market reaction.
You're absolutely right. Management presented this defensive yet resilient tone. They highlighted the sequential OR improvement, what they see as rational LTL pricing, emphasized the long-term strategy. But the market, especially right after the call, seemed to focus much more intently on the year-over-year margin and yield compression. That likely fueled the stock's reaction, and we saw a price target cut from UBS down to $73. It's that classic short-term pressure versus long-term vision story.
Right. And connecting this to the bigger picture, where is ArcBest placing its strategic bets in this environment? What's the focus?
That's crucial. They're strategically targeting the small and mid-sized business market, the SMB market. They describe this segment as less price sensitive, providing stickier, more loyal relationships. Their multi-solution approach offering a whole suite of logistics services and the continued focus on adding new core LTL accounts are central to that growth strategy. This SMB focus is kind of a defensive moat, aiming for more stable revenue even when the broader freight market is soft and larger companies might be negotiating harder on price.
Okay, that makes sense. And looking forward, what are the key catalysts, things that could really shape their performance?
Well, several things. The flow-through of that August general rate increase is crucial, obviously. Also, the Q3 operating ratio cadence, does it improve as guided? And the durability of that asset-light profitability, can they sustain it?
But here's where it gets really interesting, right? ArcBest is hosting its first Investor Day in a decade, September 29th, 2025 in New York City. That feels like a pretty big deal after 10 years.
Oh, incredibly significant. An Investor Day after a decade isn't just routine. It's where companies typically lay out a comprehensive vision for the future. They've announced plans to unveil multi-year targets, their innovation roadmap. This could provide huge clarity on their long-term trajectory and strategic priorities. For investors, this event could be a major re-rating catalyst for the stock. It's a chance to really understand management's confidence, especially with the CEO transition coming up. It's their moment to articulate how all these pieces, tech, SMB focus, leadership change, fit into a compelling growth story.
It's also worth noting their approach to that recent NMFC classification update. That's the National Motor Freight Classification, the standard system for classifying freight. A big deal in the industry.
Absolutely. And management viewed it as a positive overall for the industry. More accurate rates up front, clearer shipment characteristics should mean fewer billing disputes, more transparency. ArcBest's prep work, including their Vox Vision tech for dimensioning, apparently made the implementation a non-event for them, just minor hiccups.
A testament to their operational readiness, then.
Exactly. And furthermore, financially, they're maintaining a balanced capital allocation. 2025 capex expected at the lower end of their $225 to $275 million guidance. Plus, they've already seen potential cash tax savings, maybe $25 million from the first half, due to immediate expensing of R&D and bonus depreciation, gives them flexibility.
All right, this is the part where we put on our speculative hats. And remember, everyone, this is purely for entertainment and conceptual discussion. It is absolutely not financial advice. We're talking plausible but outrageous ideas here just to understand market dynamics.
Right. So given ArcBest trading around, what, $74.43, the UBS target at $73, and that big market reaction to Q2, a conceptual trade idea, purely illustrative, might involve navigating both that near-term skepticism and the long-term potential.
So the pitch here isn't about specific contracts, but the strategic thinking. One might consider a conceptual bearish short-term play, maybe betting on some continued pressure, or perhaps a retest of that 73 UBS target before the investor day in late September. This could act as a kind of conceptual hedge against immediate downside, given the cautious sentiment we've talked about.
And concurrently, to potentially capitalize on those longer-term catalysts, an investor could conceptually establish a bullish long-term position. The thinking would be predicated on potential upside from the investor day, those multi-year targets, the innovation roadmap reveal, and maybe any eventual positive turn in the broader freight cycle, especially with Seth Runser taking over as CEO in January. So the overall idea conceptually is to manage the near-term market skepticism with a defined risk, while positioning for those potential long-term strategic catalysts that could, really re-rate the stock down the line.
So there you have it, ArcBest's Q2 2025 earnings in the rearview mirror. Definitely a quarter of mixed signals, strong volume growth, but that continued yield pressure in asset-based. Nicely offset, though, by the remarkable asset-light turnaround and those significant forward-looking tech investments.
Yeah. The strategic leadership transition and that highly anticipated investor day are certainly pivotal points for the company's narrative in the coming months. It's a pretty compelling situation for anyone watching the logistics sector, offering a blend of immediate challenges and intriguing long-term strategic plays.
Exactly. Ultimately, ArcBest's story this quarter isn't just about navigating a tough market. It's about a strategic pivot, a leadership transition setting the stage for, well, maybe a new era. The big question really for you is whether their investments in tech and that focus on SMBs can truly deliver long-term growth, or if these are just defensive plays in a cycle that might have further to fall. What signals will you be watching most closely at their investor day? As always, remember the content we discuss here on the deep dive is for informational purposes only. It should not be considered financial advice. We definitely encourage you to do your own research, consult with a financial professional before making any investment decisions. Thank you for joining us for this deep dive into ArcBest's latest results. We hope this helps you stay well informed and curious.